Have you heard about the self-employed tax credit? This lesser-known tax credit program, courtesy of the Internal Revenue Service, is referred to as the SETC. This program was designed specifically with the self-employed worker in mind, particularly those who were impacted by the COVID-19 pandemic. If you were a 1099 worker during this time and lost income due to the events related to the pandemic, you may be eligible for a substantial tax credit, up to a whopping $32,220. The SETC was announced back in 2021, but it was under the radar for a couple of years now. If your work was interrupted by COVID or COVID-like symptoms, or you were forced to quarantine, underwent testing, or cared for a family member sick with COVID, or if your child's school was closed due to COVID restrictions, the SETC could potentially provide you with much-needed financial relief. To potentially qualify for the SETC, you would need to have been self-employed as a 1099 subcontractor in 2020 or 2021, or a sole proprietor who ran businesses, which also includes single-member LLCs. Were you a gig worker during the pandemic? Freelancers, independent contractors, on-demand workers, temporary or seasonal workers, and consultants all fall under this self-employed gig worker umbrella. If you filed a Schedule C or a Partnership 1065 on your 2020 and or 2021 federal tax returns, make sure to apply. So, if you believe your work was impacted by COVID during 2020 or 2021, then it's time to visit the SETC Self-Employed Tax Credit application site. Don't wait. Check if you qualify today.